Good morning, everyone. Pardon me. Welcome to our Thursday morning trading room. Where's my screen share button? There it is. All right. The market's not wandering too far off course yesterday, as we expected. Kind of a sideways to up kind of day for the remainder of the session. The Asian and European sessions continued to rally a little bit. We're opening with a very tiny gap to the downside. I'm not sure that's going to be a real big deal. All right, sorry, I'm trying to do two things at once here. The market just kind of holding right now. We're back into the hard edge of the trading band, where we're going to anticipate some sort of reaction, of course. And right now, they're really just taking their time here. We do have a slightly bearish bent to start, but it's really slight. The hawk already starting to drift into yellow bars, as is the raptor. The falcon also changing the trend line color. Okay, well, we've got a little bit of a sideways drift going on. All right, so I'm taking a look here, and I'm considering that this isn't going to print as a number 3 signal because the bands are actually twisted here. However, it is a hard edge bounce all the same. I'm not sure I want to risk any money on it just yet. It looks like we are going to get a second push entry opportunity. We'll see if they behave themselves. You can see we've got a little bit of a slight sideways drift to the market. I'm not sure why they're so neutral. Lots of yellow bars here on the hawk. Well, you could. I don't. It's a good opportunity to point out this feature on the Trade Manager, the OCO function. What we could do is we could just bracket this range and buy and sell accordingly. So with the OCO function, rather than use the Trade Manager down here to enter the trade, we're going to right-click on the chart and select our sell order, and then right click and select our buy order. And then because these orders are live, okay, because they're live, we can roll them into where we want them to be. And then the market fills us on a breakout. Because it's an OCO order, when the one side filled, it automatically canceled the other order. I didn't really get a chance to show you that, but there you are. And it's probably advisable that we get a stop loss in play here. So once I enable my stop loss and accept it, the Trade Manager will provide me with a stop loss. Okay, a couple of great questions here. Scott is asking, good morning, E. Well, good morning, S. feel like secret agent. Scott asks, what are your feelings about trading first right away in the morning, then trading when price is close to the goal line? I have reviewed my trades. I do better after 7, but there's so much movement in the 6:30 window. And those would be Pacific times, of course. For those of you on the East Coast, add 3 hours. What Scott is referring to is what traders call opening range. Typically, in that first half hour of trading, opening range tends to be the most volatile as traders try to establish a direction for the market. And it looks like they're going to come back here. This is why I don't like breakout trades, which is the other thing I forgot to mention. But back to Scott's question, unless it's a really juicy signal, I personally tend to avoid opening range a little bit. In fact, I think I've mentioned before that if it wasn't for the sake of the trading room, I wouldn't be here at the market open. Typically when I'm trading, I usually check my charts about a half an hour in to avoid that opening range temptation. Now that said, as Scott pointed out, there can be some very dramatic moves out of the open, and sometimes, like yesterday, that might be the only chance you really get. That's the move of the day, and that's kind of been the way the market is of late. So I guess you have to adapt to what the marketplace is doing. For those times where the market is more cooperative and a little bit more active, well then avoid the opening range because it's the least predictable time of the day. For other times, like now, when the markets are just really kind of sluggish still, you may have to consider trading opening range. So I know that's not much of a help, but for the most part, I do tend to avoid opening range. Like Scott, I found that I get better results certainly after the first 15 or 20 minutes. Early on in the trading room, I always used to avoid that signal that seemed to develop at around quarter to the hour, which would have been comparable to the signal on this breakout. Why? Because after about 15 minutes in, the market seemed to give you a little bit of a head fake. And that is something that came about through journaling as well. If you don't keep a trading journal, it's a really good idea to start doing that. So I hope that answers your question a little bit. Now, before I leave it entirely, trading is a very personal business. By that I mean I can tell you what works for me, but it may not suit you. For instance, I know there's a couple of people in the trading room that do quite well on the open or even pre-market. If you're in the Eastern time zone, of course, it's a little bit easier to trade that, or if you're an early riser here on the West Coast, it's a little bit easier to do that. But by keeping a trading journal, you'll see what's working for you. You'll see what you're comfortable with. And at the end of the day, that's really all that matters. Okay, Elmer asks, good morning, Eric. Have you ever tried to run the NQ with a 4-tick hawk and a Raptor 6 ticks to get some quicker moves and signals? No, I haven't. Oop, wrong button. No, I haven't, but let me get my Raptor back. No, I haven't, but let me put the NASDAQ on my faster Raptor chart and we'll have a look. For most markets, the default settings will work just fine. And sometimes you just have to suck it up when the markets are not that active. Here's the Raptor on the faster settings, the Raptor for the NASDAQ. And you can see we're seeing the same thing, but with a little bit more detail. If you're going to go with the faster settings, I think you also need to change your objectives a little bit. I think it would be advisable to scalp rather than try to hang on. Remember, your objective in trading is to make money. I know that's a forehead slapping moment, isn't it? Really, you say? Yes, it is. Your objective is to make money. But you'd be surprised how many people think the objective in trading is to generate signals. They think that, oh, you know, I need to add something here because I got a bad signal. So let me add Bollinger Bands, and let me add this fancy FHH range, and let me add whatever. No, we won't do that. You get the idea. I can't find anything here. Let's add a parabolic. And before long, their charts look something like this. And what they're trying to do, of course, is to filter out all the bad signals, which will never happen. So I would consider moving to a faster chart, Elmer, when the market conditions get really, really slow. Like I've been tossing around the idea of putting a faster chart on my crude oil, because crude oil, which I'll bring over here in a second. Here's the crude oil Raptor with the regular settings. These are the default settings, and there's just no signals. See, this is the entire day session for crude oil yesterday. This is the day before, and that's actually been a pretty active day. And this is rare. So if you're looking at your chart and your daybreak lines are like this, or we can even throw another one in here, you know, if you're looking at your chart and your days are split up like that, you're not going to get any trading opportunities. So for that kind of market, yeah, I think you need to look at going to the faster settings. In fact, why don't I do that right now? So here's crude oil, and that's on the defaults. Let's put crude oil now on the faster chart. And here you can see at least we're getting something a little bit more tradable, aren't we? There's a number 3 signal that we could have taken advantage of, whereas here on the default settings, okay, it produced the signal, but it wasn't really one of our high probability signals. It would have been a little bit more difficult to interpret. So I think I'm going to leave crude oil on the faster chart. I think it deserves the faster chart now. But I tend to avoid the more is better idea. I tend to avoid producing more signals just for the sake of having more signals. Remember, every time a signal prints too, you have to make a decision about that signal. You have to make a decision, is this a signal that I want to risk money on? Oops, I still got my charts organized wrong. I can't do too many things at once. Good question, though. Thank you for asking. Scott asks, how long have you been trading the NASDAQ? How long has the NASDAQ been out? Probably, I've been following the NASDAQ at least 10 years, I think. Pretty close to that. I played with the European stock index, the Stocks 50. That was good for a while. And then the Bund and the Bobble, which were the German bond markets. There was a really significant currency difference at the time between the Canadian dollar and the euro. So I could really benefit on that difference, providing I had a winning trade, of course. I would earn, I would almost double my earnings because of the difference between the Canadian dollar and the euro. So that made it a lot easier as well. If I scalped for 3 ticks, it was like scalping for 5 or 6. But the NASDAQ really has been a consistently good market. And as I pointed out the other day, you really don't need to trade higher tick instruments. You get as much bang for your buck trading the NASDAQ as you would the more expensive E-mini, and you get a little bit more flexibility as well. So it's a win-win. Joel's got a comment or a question here. Joel asks, I just purchased the Raptor 2.0 yesterday. Well, good for you, Joel, and welcome. And I'm glad you're asking questions because that's what I'm here for. Joel says, I purchased yesterday, so have not had a chance to review any training videos. What I would like to do is run a few playbacks, but I don't know what all the Trade Manager settings do. Can you go through the various buttons or direct me to a video that explains them? I will do both. So let's do the video first because that's easier. So if you go to this funky new website called YouTube, they have all kinds of videos on there. And what you want to do is you want to do a search for Indicator Warehouse, and that will bring you to the Indicator Warehouse channel. And what you want to do is subscribe to it, so it'll make it easier for you to find. This is where you'll find all the replays for the daily trading room videos. If you roll down a little bit though, these 3 videos here are the most Raptors specific. This one here, I spent a great deal of time because the markets were really slow, and I went through all the Raptor signals. So that's a good one for you to watch. Of course, because it's a video, you can take your time and you can rewind and fast forward, whatever. Trade Manager. I think there is a Trade Manager video on here as well. Or I thought there was. Oh, there it is, Trade Manager. But I will go over the Trade Manager for you right now. The Trade Manager is a pretty self-explanatory tool for the most part, and you will learn a lot just by playing with it. One thing about the Trade Manager that you need to remember is it is a strategy and not an indicator. It's more of a programming difference than anything. But if you're going to find the Trade Manager, you need to right-click on your chart and then go here to your Strategies window. And there is your Trade Manager. You'll notice if it's already turned on, you're not going to be able to make any changes to it. It's because it's already active. So the important thing to remember is if you're going to make any changes to the Trade Manager, you first need to turn it off. So go to your Enable tab, which will be the only tab you can change. Go to False, and then Apply, and you're going to notice your Trade Manager disappear. And now you can make any kind of change you want to your Trade Manager. I'll let you play with this as well, but you can just go through these one by one. I do believe the Trade Manager manual also explains these in a little bit more detail. But like I said, for the most part, they're self-explanatory. One change you'll want to make is your invalid trail stop ticks. Yours is probably set at 10. You're going to find that's a little bit tight. All this does, the invalid trail stop, which I'll demonstrate in a moment, is if your stop strategy is against the market, and that makes no sense to you right now, but it will give you a 10-tick stop, which in most cases is too tight. So change it to either 30, 40, or 50 ticks. You can always adjust it once it's live. But if it's only 10 ticks and the market's moving quickly, you can actually get stopped out before you even get a chance to do anything about it. Your auto break-even parameters by default will be turned off. I like the auto break-even, so I've turned it on. You can preset your break-even trigger and your offset, but for the Raptor, the defaults will probably do fine. Most of the other default settings will be fine. These are the colors. You can make things lighter or darker. I've changed the font, made it a little bigger. And that's more for your benefit, just to make it easier to see on the screen. Entry position, I have mine on the right instead of the left. Again, just to make it a little bit easier to read. And again, don't worry because I'm going through these quickly. If you experiment with this, if you take like 10, 15 minutes and just play with these settings, you'll see what changes they make. And it will become pretty self-explanatory. The only other thing that you may want to change is your risk volatility percentage. By default, it will be 1, but you can change that to 2. Your click tick targets, by default, it is set at click, which means you're going to manually select the profit target. I like the automatic version, which is the tick. And then your T1, T2, T3 percentage, target 1, target 2, target 3. How much of your position do you want to take off at target 1? Well, I want to take half off. So I have 50% at target 1, and then my target 1 will be 20 ticks. Once you have everything set up the way you like it, it's a good idea to save a template. So you just highlight here, type in a name and press enter. It doesn't matter what you call it. You can call it Joel's Raptor or My Raptor or whatever. But what will happen is the next time you will have the template available for you to load onto your chart instead of having to rebuild it all. If you don't like the name you gave it or you misspelled your name when you were typing, you can always remove it as well. When all is said and done, remember your enabled tab. You need to turn everything back on. And muy importante, press apply. You have to apply it to turn it on. Okay, so now your buttons. The panic exit button is exactly that. It is actually a shortcut to your flatten all or flatten everything button on your control center. So if the world is coming unstuck and you need out of your positions in a hurry, this button will clear all trades associated with this account. Your buy and sell buttons, these are market buttons. Those are pretty self-explanatory. Your close button, also self-explanatory. Your break even button, when you are in an active position, your break even button will allow you, well here, let's just buy. Okay, so I bought. Let's see if we can get a couple of ticks up here. If I can get it in the green. Okay, so now I hit the break even button and my stop is rolled to break even plus 1 tick because that's what I have it set at. The OCO function, I showed you this morning. Hopefully you were here for that. If not, the OCO function, it stands for one cancels other, and it's essentially you're bracketing a trade. With the OCO function, the only thing that confuses some people is they try to use their order placement down here. The OCO function works by right-clicking on your chart and selecting your order. Right-click, select your order. Now notice this says OCO1, OCO1. That's because these orders are connected. If I cancel one, the other one will cancel also. If I toggle my OCO and do it again, you'll see it says OCO2. If I toggle it again, it will say OCO3. Now there's different ways you can use your OCO orders. I usually just use them as an entry. These are live once you put them on your chart, so you can place them away and then you can pull them in if you like. Hitting your close button will close everything. Closing the one order will also cancel the other order that's associated with it. Sometimes people like to, I think the NinjaTrader video suggests that when you're using your OCO orders, you can use one order as a buy, and then you can select your profit objective as well. And then you can toggle your OCO, and you can select one order for your sell and your other order for your profit. I don't know why that would work, why they suggest that, because if this order fills, that one cancels. But I do believe the Ninja video shows something like that. All right, flat entry. Once you have an active position, this will change to long or short. It will also show your entry price. This is your P&L. You can toggle through it. You can see dollars, ticks, a percentage of your count, or my personal favorite, just blank it out. If you're like me, this gets distracting. I want to make decisions based on what's going on the chart, not because I'm up a certain dollar amount or down a certain dollar amount. Your market data bars, your current bid and ask are displayed here. Okay, your trade manager portion. If your trade manager probably looks like this because your trail indicator is checked. If you uncheck it, you can turn your trade manager off until you need it. It also makes for a slightly cleaner chart, which I like. By default, the ATR is your default strategy. You can change it to whatever you want. You can also change your default strategy, by the way, when we were going through the strategies window. Where is it? Right here, default trail indicator. You can select something other than the ATR. But the ATR is a pretty good run-of-the-mill type strategy. There are 16 different stop strategies here for you to choose from. Feel free to experiment. If you would like to see what a strategy looks like while you are in a current strategy, that's what the preview window is for. So let's say I want to see what parabolics look like. I can preview them and I'll get these orange hash marks. If that looks good to me, then I click accept, and then it will accept that particular stop strategy. The fixed tick strategy, again, the only one that might cause people some difficulty. Let's say you wanted to buy and you want to be, I don't know why they included the opening price, but at any rate, let's say you wanted to be 15 ticks off of the low. Oh, I want to buy. What's my stop strategy doing up there, you say? I need my stop strategy down here. Well, behind the scenes, there is a moving average line running through here that the programmer used to decide which side of the market the stops should be displayed on. So if you're using the fixed tick strategy and it's displaying on the wrong side of your trade, simply put a minus sign in front and accept, and now you're going to display your stop on the correct side or where you wanted it. It's important to remember that this value will be off the last bar, right? So it's off of this bar right here. Let's see, what else can I tell you? Like I said, play with it. You'll learn a lot just by trying the different strategies, especially if you are in sim. You know, see what the different settings look like. See what happens if you're in a trade and you change your stop strategies while your trail indicator is enabled. The risk manager portion right down here. This is going to save you as a trader, and I mean that. This little tool down here will probably do more for your trading success than almost anything else you can do. This button right here, your risk percent mode or manual mode. When it's in risk percent mode, it's going to default to this value right here, 2% of your trading capital. And what that means is you will never ever be able to take a trade that will risk more than 2% of your capital. So let's say I was looking at this number 3 trade, this number 3 signal, and I wanted to risk it all the way down here. Trade manager says, oh, nope, sorry, Eric, you can't afford that. That is out of reach. So then you have a decision to make. Do I try to do the trade with a tighter stop? Or do I just let the trade go by? Because I can't afford it the way I want it. If you go to manual mode, it will default to this quantity right here. By default, it is set at 1 contract. And then you can take a trade regardless of the risk amount. The order type, by default, it is a stop order. If you're in a really fast moving market, which we have not seen for a long time, you can use a stop limit to limit the number of ticks you can be slipped. There's also limit orders and market orders if you like. If you choose a stop limit, it will default to this amount of slippage. Down here we have the let me see if I can clean that up. There we go. Excuse me. Okay, down here we have target 1%, target 2%, target 3%, and your runner. As you can see, I currently have it set up as a 50-50. You can also, change those parameters if you want. Let's say you want to take 3/4 of your position on target, only leave 25% of your position on target, or let's say you wanted to go in thirds. You want to have a third at target 1, a third at target 2, and a third on as a runner. You're going to see you need target 1 is set. I need to set a value for target 2. And now when I place a trade, providing I can take at least 2 contracts, I will have 2 targets. And you can see in total I can take 4 contracts if I set up this trade, risking 2%. And target 1 will take off a third. Target 2 will be a third. And it will round down. And then target 3, or the runner, will be the remainder. There we go. If you want to choose your own profit targets, if you toggle that, you can click targets enabled, which means I'm going to select my entry, my stop loss, and now I manually will select my profit target. But for convenience sake, I don't mind the programming selecting the target for me. Once the target is live, once the trade is live, I can move my stop loss, I can move my profit target manually. So there is your really quick overview of the Trade Manager. And of course, you can also review it when today's video is posted online later today. Yeah, Mark says, yikes, too much noise. Absolutely, Mark, look at this. We're just retracing our steps here. John makes a comment here. He says, Scott and I keep very detailed journals, very, very helpful. I keep to the trades and trends. Scott, on the other hand, puts all his candy cane dreams and thoughts about rainbow unicorns. The important thing with the trading journal here, there's nothing going on, so let's take a look. I really should update this, but here is a page from a trading journal. Where did I put it? I guess this is about 5 years old now. Oh, to the, yeah, sorry, I thought it was January 8th. I was going to say to the day. As you can see, I'm just using a spiral notebook. There's a lot to be said for a handwritten journal. I should also point out I very rarely ever review my journals, but something happens when you actually write stuff down. You'll develop your own little shorthand, of course, but the simple act of writing something imprints it on your brain, and you're going to recognize when you write the same thing over and over and over and over. My journal is a little bit more detailed now than it was at this time. This was during the profit run, and you can see I was taking quite a few trades, and so my journal was a little bit more condensed. But even 5 years later, I can tell you what happened. I have a timestamp. I sold the Eagle. This was the 30-year bond, one contract at 149.27, stop loss 150.07. I also make note of my profit objective now, but I took a loss on that trade. And when you take a trade, either a winner or a loser, well, the winner not so much, but certainly the loser, you should try to identify why the trade went sideways on you. And you should also try to have two reasons for taking the trade in the first place. So here were my two reasons for getting in. It was the first signal of the day, which usually works pretty well for the bonds, and it had a head and shoulders top. So I thought, okay, the market's going to come down, but the end result is I was too early. There was no trend yet. I was stuck in the sideways market. At 6:46, I bought the Hawk with I bought on the Hawk the mini Dow, 2 contracts, stop loss, took a loss. It was the first micro macro cross. I thought it was a retrace. Crude oil was up. There's a slight relationship between crude oil and the Dow. But what did I learn from that? No, the market was still in a downtrend. It hadn't changed trend just yet. 6:49, and this is where I found out about that quarter to the hour sucker signal that the market throws you by repeatedly writing these order entries at around 6:43, 6:44, 6:45, 6:46, and always putting a minus sign there. I finally clued in that, yeah, okay, quarter to the hour, maybe I won't trade that signal. Five minutes later, though, things turn around. 6:49, I bought the Falcon, the NASDAQ, 3 contracts, $300 profit, first signal, second push entry. And this is why you hear me refer to some of these things, because by journaling them, I found out these things work. 10 minutes, 15 minutes later, sold the Hawk, the NASDAQ, 2 contracts, $100 profit, first micro macro cross after a failed buy, downtrend. So these were my reasons for taking the trade. And like I say, even if you never ever review your journal, just the simple act of keeping one will imprint things on your memory. And I guarantee it, I will put it in writing that within 2 weeks, you will start to notice patterns in your trading, good as well as bad. And you will be able to correct course more easily. We've all heard the statistic that 90% of traders lose money. Well, what about those 10% of traders that are making money? What are they doing? The 10% that are making money, of those, 99% are keeping a trading journal. That last guy or girl, that last 1% is either a naturally gifted trader or just plain lucky. And chances are you are neither. If you write me with a well, depending on what your attitude in your email is, sometimes people write me some very snarky emails, and they'll say, "Oh, you know, this stupid raptor gave me this signal here, and I took it, and I lost money. Stupid thing, it doesn't work." Very often, I will ask you for your trading journal. I will say, "Tell me what you wrote in your trading journal to make you take that trade." And very often, that same person will never write me back because I know for a fact they didn't keep a trading journal. Because you can't give me two good reasons for taking this trade. So just a little note to self. Sometimes the markets really are the best teacher, and the simple fact of keeping a trading journal, you will learn a lot. So if you want to join that 10%, do yourself a favor and keep a trading journal. I'm serious. Okay, a couple of comments here, a little bit stale, but where I was throwing all that stuff on the chart, the Bollinger Bands, the parabolics, and so on. Mark made the comment, I've always lived by your comment saying that I've always lived by your rules that unless it helps you make a trade decision, it isn't worth having on your chart. And that's important to remember. A lot of people go down the rabbit hole of throwing more and more stuff on their chart in an attempt to filter out a bad trade. Listen, folks, the most difficult thing about trading is determining trend and determining when there is no trend. I would say today there is no trend. We have up, we have down, we have up again, and it looks like we're coming down again. So we've got at least 3 or 4 attempts at a trend here and yet no trend. So just resign yourself to the fact there is no trend today. Go do something else or come back in an hour and see what the market's doing. Maybe it will have shaped up. If you miss a move, whatever, you miss a move. Trust me, I've been doing this for a while. You will miss a lot of opportunities as a trader. So the earlier you resign yourself to that, the better off you will be. Don't beat yourself up for missing a move. Don't beat yourself up for taking a bad trade. But if you do take a bad trade, try to figure out why. What did I do wrong? What did I miss? Was there something there that told me this was not a good opportunity? As they say, education is expensive, so you might as well learn something from your mistake. Okay, Joel said set prices button is a mystery to me. I hope that you can see it just allows you to place your order and then you place your stop loss. And if you're using your risk percent mode, Trade Manager will calculate how much you can afford, how many positions you can afford relative to that risk. Note that your risk amount will never ever change. Well, rounding errors excluded. If I put my risk up there, look, I'm still risking $300. But what has changed is now I have 1 contract in play versus 3 when I had my exit stop down here. So you might be asking yourself, well, why would I not trade 3 contracts? I would make 3 times as much money. Yes, that is true. But trading is always trading is appropriately named because we're trading off probabilities. So if I place my stop right here and I could trade 3 contracts, I'm trading a lower probability of success for a higher profit. Right? If I place my stop right here, there is a greater chance that that stop will get hit here than here. By placing my stop up here, I'm trading a higher probability of success for a smaller profit. There's always that trade-off. Now, personally, you're going to see, I like a wider stop initially. I can always bring my stop in. But because Trade Manager gives you your maximum risk exposure to start, it really is a little bit more difficult to roll your stops back. Because if right here was 2% of my capital, if I go back to here, now all of a sudden I'm risking 4% of my capital. Okay, not a deal breaker. Usually 5% or less is considered prudent. You're not going to ruin yourself. But if I go up to here, now it's 6% of my capital. Up to here, now it's 8% of my capital. Right? If I take my initial stop and keep rolling it back. When you start routinely risking 10% of your capital or more, then you're in danger of blowing up your account pretty darn quick. It doesn't take too many losing trades at 10% of your capital to put a serious dent in your trading account. Sure. Phyllis asks, can you take a moment and show us the Asian session and the European session? Okay, Pacific time, the Asian session starts at around 5 o'clock. So that's right here around 1700. Kind of quiet through the Asian session. If you are trading after hours, gold is a all-round 24-hour market, and it tends to be fairly brisk during the Asian session as well. So there's the Asian session. This is midnight New York time. Shortly after that, the European session opens. And that will continue until the North American Open right there. So fairly quiet. Here's the Asian. Here's the European. Fairly quiet day overall. There is obviously a little bit of overlap between the markets. If you do well, here, I'll do it for you. You can just do a little search for trading time zones, and you'll get all the opening and closing price times. I think there's even an illustration here somewhere. Someone did a map and they overlapped. It's more of a big deal for Forex traders, of course. But if you snoop around a little bit, you'll find somebody did a map and it shows all the overlapping time zones. Joel asks, is there a stock template for the Raptor? I don't trade futures or Forex. I trade out of an IRA, so no shorting. Yes, the default template that came with your Raptor would be your stock template. You may need to adjust depending on which stocks you're trading. So what do I mean by that? Well, if you open up your stock chart and your timestamp, you're getting too many trades. This one's not bad, but sometimes you'll open up your chart and it will say like 501, 501, 501, 502, 502, 503, 503, 503. You're just getting things developing too quickly. You're going to have to adjust your brick size. You're probably going to have to go to a larger brick in order to slow things down a little bit. And here, while we're on the subject, your Raptor is an indicator, so you can go to your Raptor, highlight your Raptor 2.0. There is a correlation between your Hawk brick size and your clouds relative to your brick size here on your chart. So you'll want to make a note of this. Relative to your brick size, your Hawk is approximately 75% of your brick size. So if you change to say a 10 tick brick or let's say a 20 tick brick, your Hawk will be 15 ticks. You'll change that value to 15. On your Raptor clouds, your second cloud, your faster cloud, will be the same as your brick size. So again, if you change, say, to a 20 tick, this value would also be 20. Your slower cloud is 1.5 times your brick. So if you're running a 20 tick brick, it would be 30 ticks. You would substitute 30 in there. And I'm just pulling these numbers out of the air, of course. While we're on the Raptor, your signal parameters SE, this is for your number 2 signal, your soft edge sell. By default, yours will say 1.01. You may want to dial it up a little bit. 1.25 I find to be a pretty good setting. The higher this value, the more counter trend signals you will print. Well, you're not going counter trend anyways, are you? So that's not so much a problem for you. Joel says 45 ticks seems to approximate the daily time frame, which is what I normally use for swing trades. Yeah, you'll have to experiment a little bit. Yeah, Joel says I trade primarily 3 times ETFs for the various sectors, 30 in total if you count the inverses too. Like I say, play with it a little bit. Start with the default settings, and if it looks, if you're rolling through your chart and you're rolling and you're rolling and you're rolling and there's no day breaks or your timestamps are too close together, you may need to go to a bigger chart. If you're looking at your chart and your day break lines are like this, well, you certainly can't, if this is an entire day, you're not day trading, right? You're not getting any signals. this day here, you wouldn't have had, or I guess you would have had one signal really early in the day. But if your daybreak lines are like that, your brick size is too big and you're going to need to reduce it. But if you keep that rough relationship between the hawk and your clouds on your Raptor setting, that's the best place to start. That's a good starting point. Oh, I see. Joel's in it for the long run. Joel says, I usually hold for a trade for days or weeks if possible. Okay. Yeah, Joel says money's made on the gap ups. And goodness knows the market has been on a tear to the upside, so there's been a few gaps to be sure. Scott's asking question on the hawk on the short signal at 720. Is that the bad boy right there? Yes. Scott asks, which is better you feel? Take the trade at the hash mark or enter lower than the left, the low on the left at 66.84. Okay. Okay, so what Scott is asking, do I enter the signal on the hash mark or do I enter the signal below that low? Which do I think is better? Well, a couple of things for you to consider when you're looking at this signal. What is the overall market trend? Does there seem to be one? Well, we had a little bit of a bearish slant here, and then the market tries to recover, and it's failing near this swing high. Not only that, but it's also given me a test of the extreme, hasn't it? The extreme can either be viewed as this being the extreme and the failure, the extreme being this little swing high back here. Or you can also view this as a test of the extreme. So there's a little bit of bearishness coming into the market at this point. That aside, it's also a matter of logistics, because if I enter here, if I'm going to delay my entry, I need to give up almost all my profit target before I even get entry. Or actually, I do give up all my profit target before I even get entry. So in this case, I would take the earlier entry. If it was a signal like this, for the sake of a couple of ticks, I would take it below the low. Notice this one, the structure isn't as nice on this one. There's no test of the extreme here, right? The market made a high. There's no retest of the high to suggest that the buyers are not strong enough to resume the trend and that the market should head lower. It just goes up, makes a V top, comes down, and if anything, it looks like we're testing the extreme on the low and that the market may fail and head higher, which would be another reason to enter below the low. But in this case right here, yeah, it's really more a matter of logistics, where if I delay my entry, even though it worked out, if I delayed my entry, it doesn't make much sense. Better for me to get in here, and if it looks like if the market turns on the next bar and it looks like these lows are going to hold, well, I can certainly bring my stops into here, or maybe even just above, or even at break even, and hope for the best. That's what I would say. All right, well, we're still kind of just wishy-washy here. Not sure we're really going to get much going on here today. It's just the way it is right now. Lots of sideways back and forth. Well, we'll hang with it for a few more minutes, see if anything develops. I've got a bit of a busy day going on today, so if we don't get anything promising, we might button up shop a little bit early. Well, we're getting the market retreating a little. The hawk already back into yellow bars. We are encountering the hard edge on the eagle band, and the raptor band. So we should anticipate some sort of reaction, but we're getting really a mixed bag here. The hawk, very neutral. The falcon trying to get bullish, and the eagle, well, that band is starting to twist up like a rope, as is the band on the raptor. So a very sideways congested market right now. Joel's asking, how do the mean Renkos differ from regular Renkos? Great question. The mean Renko, which is a terrible name for such a good bar, sounds like the angry Renko bar. It's called the mean Renko because each bar will print or begin at the mean or the middle of the previous bar. What that does is actually really good for the programming because it smooths everything out and it allows the indicators and the programming working behind the scenes here to work very efficiently. The mean Renko bars have the strength of a range style bar, which range bars are very good at showing you support and resistance zones. With a range style bar, it's a bar that prints only after a certain number of ticks have been achieved, regardless of how long it takes to do. You can very plainly see where the market is finding resistance, where it finds support. And this is really the chief benefit of using a Renko bar. The regular Renko bars, however, lack sensitivity. So, and if we put Renko bars on here, you're going to notice that all the wicks have disappeared. So you can still see where the support and resistance zones are very plainly, right? It's very plain to see where the market swings. So it's very plain to see where the market is pivoting, where it swings. However, like I say, there's no sensitivity on the bar. This one is actually moving with the current price, but very often Renko bars, this bar will not print. There, you won't see anything there. This is how most Renko bars are. Nothing will print until that bar completes its range. So until that bar goes 8 ticks, you won't see anything. So that's kind of the annoying part about Renko bars. The mean Renkos have that sensitivity added to them though. Where you get the benefit of a candlestick, if you will, so you can see the wicks and the tails combined with the power of a Renko bar or a range style bar. So you get the best of both worlds, really. All right, gang, we're kind of stuck in sideways mode here today, so I think we're going to button up shop a little bit early. Until the market gets outside of this trading range, though, it's going to be tough slogging, so come back this afternoon, take an early lunch, and see if the market isn't behaving a little bit better. But right now, I would probably call it a wash on the day. Okay, well, we'll get back together again tomorrow. We'll do it all over again. We'll talk to you then. Bye for now.